What is up, YouTube? What is up, guys? The Composure Trader here, and welcome back to another post trading analysis video. Now, we're gonna be discussing a trade I took on Friday, and it is currently Sunday, but I can explain myself because I have been very busy with, finishing the last touches, the last details of the launch of the TCT community, which I can confirm now will be launching this upcoming week. So this upcoming Monday to Friday, TCT will be live. The mentorship on YouTube will be there. The Discord server will be there. It's gonna be amazing. So I cannot wait to see you guys on the other side, where we will just be trading live together, exclusive trading setups, mentoring, you name it, backtesting arenas, like everything you need to become profitable will be in that server. Okay, so um, also, I had a podcast recording on Friday, which I think will be going live in like 2 weeks. And it was a roundtable of different traders talking about different TA. And obviously, I was representing TCT. And guys, come on now. Like, TCT doesn't just take part, we take over. Okay. So the podcast went in depth about TCT and the style and, some little discussions here and there. So make sure you watch that. I will be posting the links to that video on my socials. Now, going into the Bitcoin price action, discussing the trades that we took, because I did get a lot of questions regarding, hey, why did you not take the Model 2 accumulation prior to the Model 1, etc., etc., etc. So we're going to discuss all those questions and answer all those questions here in this post-trading analysis video. So initially, going into the price action, I gave you guys my expectation of, hey, I think we'll be rejecting in this 66K area, which we got, and then we shorted it on Sunday with the TCT Model 1 distribution, and we took it all the way down towards those sell side liquidity lows. And from there, I gave you guys my first demand POI, which was right here. This was our first demand POI. Now, initially looking at this demand POI, we saw the bounce, and then we started closing candles deeper into our POI, which was less bullish, in my opinion. It kind of showed this demand POI failing. But that was until I identified it more, and I realized that in that lower section of this bigger demand POI, we have this 30-minute order block. And not only is it a 30-minute order block right here, you can see that this 30-minute order block is part of a TCT accumulation schematic where this Model 1 flowed over into a Model 2. So it's kind of a market maker order block in some sort of way, making me way more bullish into this range potentially breaking towards the upside, and therefore being an accumulation. Okay, so we came into that POI with lower highs and lower lows, and from there we created our range where we have our range low and we have our range high. And then from there, we had a deviation of our range low right here, and we had our range high with that deviation of the range high, kind of showcasing a potential accumulation and a distribution in the making. Now, from there, from the distribution part, we had this 30-minute order block right in that pivot point, which is your extreme supply and therefore a requirement to get mitigated in order to call it a third tap of the Model 2. Because looking at it from a liquidity standpoint, there wasn't really any good liquidity to look for. You can argue that this was the first high time frame market structure high from the top down, but it was a bit more sketchy from a liquidity standpoint because basically this entire move down from top to bottom was just all liquidity. There wasn't really any, singular clear extreme liquidity point for the distribution. But since we came into demand, I was way more focused on looking at this from a potential accumulation perspective. So the moment we get that first move away from the deviation, we should be immediately thinking of, hey, where is the POI where the third tap from a Model 2 perspective can be valid and or the third tap from the Model 1. So we're going to extend that range low to the deviation low, showcasing our level for a potential Model 1. But also we have to identify where can the Model 2 take place. So for the Model 2, we want either an extreme liquidity grab or an extreme demand mitigation. And looking at our market structure from bottom to top, we can see that we have our high, higher low, higher high, again following the 6 candle rule that is explained in my already TCT free tutorials on YouTube, and obviously will be way more explained in the mentorship. So right in that pivot point, we have this 3-minute order block, okay, which is our extreme demand. And right below that, we got that first market structure low that was created, and therefore our extreme liquidity. So we kind of had both in the same area, and we can see that the moment that price came in here at 10:30 in the morning, this met the requirements of a third tap. Now, to confirm a Model 2 accumulation, you have your tap 1, you have your tap 2, and you have your tap 3. And to confirm it, you need to break market structure back to bullish from the highest point right here between tap 2 and tap 3 down towards your third tap low. So checking our most local structure coming into that third tap, we can see right here that price was making lower highs and lower lows following the 6 candle rule right until we swept that extreme liquidity point, and that's where we broke structure back to bullish, okay? Right here, we got that structure break back to bullish, confirming our Model 2 accumulation. Now, there was a problem, or there is a problem with this Model 2 accumulation, and that's regarding our return to zone. I barely take TCT schematics that don't have a proper return to zone, okay? And regarding this accumulation schematic, we came down very aggressively, leaving behind supply zones, okay? So obviously we had a supply zone right up here, and we had a supply zone all the way up here. So it's very hard when you long right here to target the high, because it could go over the distribution, and even along the way, we have supply that we need to surpass. So whenever I see a good looking supply zone, because this was also in confluence with around that POC, so yeah, you had that supply zone with the POC of the range. Whenever I see resistance like that, when I want to long, I kind of want to wait until I see the rejection from that supply zone, and I will enter on signs of strength after rejecting from it. So the moment I see a bullish break of structure right here, confirming this is like an LPS or just a higher low, that's when I'll actually long, because now I know that price will come back up towards that high, and this supply will not be there anymore because it's already mitigated. But I don't like longing an accumulation schematic when we have such a good looking supply zone right above us. Now, if you did end up taking it, okay, because technically speaking, this is 100% valid, it's just not a high probability TCT schematic. And that's something I'll go over to very in depth in the mentorship. But we left behind demand right here, good looking range demand, okay? The moment you are long, let's say you are long right here, the moment you see price reject from this POI, and you make a lower high and a lower low, okay, that's when you can put your stop loss to entry right here. Why? Price will only be bouncing right here if it can break this market structure high. This TCT accumulation schematic will only complete itself if price can break structure from top to bottom after rejecting from that POI. If it can't do that, you'll go lower. So what you can do is you can de-risk yourself, okay? So you're completely de-risk, your stop loss is entry, and you re-enter the moment you break structure, okay? So I just got some messages regarding my website, guys. You re-enter the moment you break structure, okay? So you de-risk here, and then if you break structure, you jump back in, and now you can target at least towards this supply zone, which is the target if this is going to be a distribution or the accumulation is going to play out. So if you took it, you should have been de-risked the moment you create a structure in the leg down, okay? And then you will have not had a loss in this trade because price ended up, just continuing its structure from top to bottom, staying bearish, and then it took that range low. So it never broke back to bullish. Therefore, there was no reason for you to get trapped into thinking price was going to bounce there. And The beauty of it is that now it went over into a Model 1, right? It went over into a Model 1. And the beauty of the Model 1 is that now there's no supply here anymore because the supply is already mitigated. So looking at the Model 1, it was very sketchy. It was very sketchy initially to potentially confirm an entry because right here, we got that break of structure, right? Breaking our structure from the top down back to bullish. But I think, was it 5 minute? Let me double check. No, it wasn't 5 minute market structure, but the thing is, your 5 minute market structure was right up here. So applying the 6 candle rule, you did have 5 minute market structure here. And that's what you SFP'd. So I didn't feel confident into longing because you did not break any structure. And even if you did want to long on that break, which wasn't a break, your stop loss has to go all the way down to here to only target, best case scenario this high, which is the 2, but you have to be aware of this extreme supply POI. So now it's only 1.39. So I was just waiting. I was just waiting. And then right here at around 7 p.m., what we did is we swept literally extreme liquidity right here. Swept extreme liquidity. And then we broke structure. We broke structure right here back to bullish. Okay. And you could have looked at it from different perspectives. Okay. You could have said to me, because multiple people said different things. I told you guys about this setup live. I was like, are you guys seeing the same setup as me? But you could have said that this Model 1 flowed over in a Model 2. Or you could just argue that, hey, we have a local Model 1 inside of our bigger Model 1, where this is a 1, 2, and a 3. Like, both were valid and come to the same conclusion, which is higher. Now, the reason when price did this, I wasn't expecting a rejection from that supply POI anymore after price did this. And my reason is that the way this range has been setting itself up, it was looking like it was going to squeeze towards the upside. Why? Well, checking price action right here, I could clearly see that price was really contracting down. So right here, let's make that perfect. For now, we can do this. What I was seeing is that price from the high to the low was really contracting and tightening up, right? While deviating that low right here. So this break of structure right in this area was truly a decisional point for me because I could see price tightening up within the range. We were creating some sort of a return to zone. And then we had that Model 1 that had a TCT within a TCT schematic for that refined entry. So I was seeing also, if I get rid of this supply zone, I was seeing a range that was contracting, leaving a return to zone with a price action gap in here. Because at that moment in time, there was no price action in the upper section of the range. So to me, it was really obvious that price will have a sweep back into the upper section. And since I knew that, that 30-minute supply zone on the lower time frame with nothing but liquidity, I wasn't really expecting a Model 2 to form. Because the Model 2, that would mean that, hey, this is only an accumulation for price to start distributing. But the way this was forming from that second tap high, I was really just focused on the accumulation side because it was looking like it was going to pop. Okay? And I also said this, that I wasn't really expecting a Model 2 distribution to form. But obviously, you have to be aware. Now, what actually ended up happening is that price was really, really, really slow. It was very annoying. We didn't get that aggressive pop-up effect. It was very slow. I think it was also because of the timing. Like the entry was at 7 p.m. UTC +2. So it really took its time in order to move up. I think if this was in more volatile times, this would just be one squeeze up, right? Now, what we had is that right here, we did reject from that supply POI, and we did broke structure back to bearish, but the only reason that structure broke back to bearish was to mitigate this demand zone. So right here on the lower time frame, this broke back to bearish, and I made people aware of this. I said on my X profile right here, I made the comparison to Pepe. I was like, normally when price is really ready to pop off, it likes to trap people into thinking it will be a distribution. So when you see Pepe here, I remember trading this. You had the Model 1, which was my entry, and I thought it went over in the Model 1 distribution that broke structure, but the only reason it broke structure was to mitigate the demand zone. And then we popped off, and I missed out on this aggressive move. And right here, I was seeing the same thing, where we had this demand zone, so to break structure, the only reason for that was to mitigate the demand POI. So I made people aware of that. And as you can see, that's exactly what happened. You can see the V-shaped recovery. It's very tricky. Doesn't happen that often unless it really wants to go higher. And I was expecting it to go higher, okay? And right now, we're currently moving a bit up as well. So for this trade, I'm still in it. I have 25% just running. And either I take this trade to new highs or I get stopped out at break even because I am de-risked. But the reason why I'm potentially taking it to new highs is because following our main structure leg from bottom to top on the high time frame, like the daily, this could be a higher low for a higher high, right? So it's also in line with that October narrative, and then the first week we dump and people cancel the whole October move, and then we actually still get it. So I'm taking this all the way up to here, and then I will take more profits. But I already realized around 3%, which is amazing. So locally speaking, we do have a good looking supply zone right up here. And right below that, we have liquidity highs. So going on a lower time frame, you can see all these highs on the left here. This is that extreme liquidity point. So I do expect a rejection in that zone. But just know that my stop loss is at break even, and I realized 3%, and I still got like 1% in the trade right now that is unrealized, and we'll see how far we can take that before we get, or if we get stopped out, right? So that was kind of the trade and the reason why I didn't take the Model 2, simply because the Model 2 had so much resistance and needed to surpass. I just wanted to see what price did at that resistance. But even if you took it, you could have de-risked yourself. And it ended up becoming a Model 1 that was really tightening up. And even though it was tightening up, the move was a bit slow, but that's because the volatility just wasn't there on that Friday to Thursday night. So, yeah, just a beautiful TCT Model 1 that was given in advance on the socials. So, that was it, guys, for this today's post-trading analysis video. Hope you learned. Hope I cleared up any confusion you may have. And I'll see you guys this week all in the TCT trading community. Love you guys. Peace.